What's going on, guys? Thanks for your time and watching. This is Baro, aka Invest Mentor, and today is August 10. It's towards the mid-August. It's towards the mid of the third quarter this year. And in today's live stream, it's August 10, Tuesday. Okay, so in today's live stream, we're gonna as usual, we're gonna have a quick look to see what's going on in the past few days for the U.S. economy, for the U.S. stock market. And we will dive into some of the technical analysis, some of the fundamental analysis of some of the popularly traded stocks, and we have been mentioning. Okay, so last week was a week of economic data, employment data. We have like ADP on last Wednesday, and we have the EMI, and also the ISM, and also the non-farm payroll on Friday, but the data was kind of uneven. But all in all, like the non-farm payroll data was kind of came out like much better than expected. Well, last Friday, the non-farm payroll was announced to have almost a million new jobs, and so directly just like pull down the unemployment rate even lower. So today we're also gonna have a quick look into some of the breaking news today. And I mean, so generally, I mean, so this week, like we know that like U.S. Senate Democrats is also going to unveil a 3.5 trillion budget plan, which with a focus on the renewable energy and a lot of the infrastructure in the U.S. And this that's why the stock market just remains so strong. Just had another breakout to have another record high, specifically for S&P 500. So the government still sending money through through all channels, and so the stock market, the financial market still flood with a lot of the cash. Okay, so that's why we keep seeing record high. But some of the investment bank last week, Goldman Sachs, and also this week, Bank of America also have some issue some warning. The U.S. economic recovery might be peaking. In the third quarter of this year, or no later by the end of this year. So, so it's been mentioned over and over again. We have to be really cautious. We have to be really conservative to protect our assets, to kind of to think twice for our trading investment. It's better to move most of the capital from those risky assets into the hedging assets, or more like a value stock. Okay, so yeah, let's have a quick check to see some of the major news so far this week. Right, so I was going to share this news, 3 stock market red flag. Okay, and this is this is according to the Bank of America strategist. What's the 3 stock market red flag we have to be aware? Okay, so you can see the strategist Brian from Bank of America. It says last Friday, S&P 500 just had the 44th record high this year. And meanwhile, the second quarter earnings season continued to impress with some eye-popping growth rate for corporate sales and profits. So the second quarter earnings season just got a really good performance. All right, my cursor, my desktop is kind of lagging right now. My cursor is stuck. Sorry. Okay, so roughly like 87%, almost 90% of S&P 500 companies have reported a positive earning per share. That's really crazy. But think about that. I mean, what just happened in the past like 1.5 years? COVID-19 and people just got locking at home. So how come S&P 500 still reported a positive earning per share, and 90% of S&P 500 companies reported positive earning per share? Why? Because the U.S. government just have an epic, historical, unprecedented money printing cycle over and over again from the Trump government administration to a Biden administration, because US is the strongest country in the world right now, and it's the biggest capitalism system in the world. So the stock market decide everything, almost. I would say almost. Okay, so no matter for Trump, Biden, everyone has to support the stock market. And that's another question just emerged from here. Is it good or bad? And so, and let's keep going through. So the earning growth rate for S&P 500 company have averaged 88.8%, tracking the fattest clip since the fourth quarter of 2009. It's the earning growth rate is the strongest since the 2008 financial crisis. But this year, 2020 and 2021 is the time of disaster. But the stock market, the corporate earning, the economy still can really go, that strong. That's really, at least from my 2 cents, I think it's really strange. It's really odd, okay? So, so once again, everything said or produced on this channel on Borrow Investment Tour is purely only for educational, informational, and entertaining purpose, okay? So, there's no financial advice here, and I'm not a licensed financial advisor. So let's just chit chat, okay? Have fun. But for each of your trading investment, please do your own investment research, do your own due diligence, and be responsible for your own profit and loss, okay? So let's keep going. Okay, so now about the 3 red flags for stock market, according to Bank of America strategist. First, mentions of inflation on corporate earning calls has continued to accelerate. Okay, so inflation is brewing and getting worse. Not for this quarter. It's been a while. Since the start of this year. Okay? And so what's the second red flag? So the first quarter growth rate in inflation mentioned tallied 900% year of year. There are so many people talking about inflation, so many mentions about inflation, 9 times more than before. Okay, so such sequential acceleration in inflation mentions by executives suggest it will remain an issue well into 2022 next year, and likely a headwind to profit growth. Okay, so if inflation is worsening, okay, the profit growth for corporate earning has to slow down. So a lot, I mean, Goldman Sachs and the Bank of America, a lot of like, I mean, investment bank and the financial professional expert are saying the economic recovery, the U.S. economic recovery is going to be peaking in this quarter and no later than next quarter. Okay, so and also in the previous live stream we have been saying that it's kind of weird for the U.S. economy and the stock market right now. It's just like someone keep like sucking a lot of like snorting a lot of the cocaine or a drug to stay high or something, but it's not really a healthy condition, right? Because I mean, not as many, I mean, because of the pandemic, American people don't really have the chance and energy and time and space and room to work, to struggle for their life. Okay, that's the thing. And so if cost pressure, I mean, like if like inflation, I mean, worsen, if the cost pressure from like commodity costs, from labor costs, I mean, the cost pressure continues to accelerate, we could see more downside risk in second half margin. And among that gloomier outlook for profit margin, corporate sentiments appear to be peaking. Okay, so here it is saying here again, okay, the corporate sentiment is going to be peaking. That's the I mean, that's a red flag. So if the inflation like keep going up and the economic recovery is going to be peaking, and what's going to be the next for the US economy, for the stock market, and by then like the government, the US government, the Fed still have to be tapering to reduce the debt purchases, and they still need to I mean do the like they still need to raise the interest rate, right? And so I mean it's I mean like we're not saying the disaster is coming anytime soon, but we just have to be prepared. Okay, so as I mentioned in the previous live stream and short video, like over and over again, inflation, market crash, like stay I mean do your hedging, risk management, portfolio management, just like cash out to hold some more cash, to wait for some like good dips to buy. I mean, that might be better. Okay, so yeah, think about that. So let's just go quickly over some of the major. So you can see, as just mentioned, US Senate Democrats unveil 3.5 trillion budget plan. Okay, and with a focus on clean energy. The government is like encourage clean energy manufacturing and transportation. That's how like Tesla stock just surged, just spiked up in past few days. Okay, so yeah, thanks guys, thanks for your time and watching. And yeah, we have some like chat here, sorry to just leave out for a minute. So yeah, non-farm payroll report just came out last Friday, and it just came out like just better than expected, with almost like 1 million new roles. So the US government keeps like printing money, sending money to the financial market, to those corporate, to those like big company, giant company, to those small business, to every household. Like that's the power of US dollar. Okay, all over the world, like only the US, America can do something like this, right? Just like British people cannot do the QE, or like Germany cannot do the QE in a way American do, right? Because everyone in the world is like using US dollar. So no matter how much US dollar is printed, the inflation will partially digested by the other countries with good relationship to the US. Okay, so yeah, that's also another question. Okay, so but we skip that now. The US government always think twice before trading. Red flag, yeah, the red flag we just mentioned. We need to stay cautious. Okay, and S&P 500, the market is just open. Let's see what are some of the market just open for 2 minutes. So let's see what are some of the super mover today. You can see on my like trading screens, like AMC just spiked for about like 7%. And please take a look, and I'll be right back real quick, and we will check into some of the stock, the tickers for some of the technical analysis. Alright, sorry for the pause. So yeah, so what's going on for the US stock market, for the market open right now? Let's see. Okay, let's see what's going on, but it's already like just record higher and higher and higher. So we're kind of like immune for that right now. So yeah, the Dow Jones Industrial Average is up. The all the major indices is up for about like 0.05 to like 0.1% right now. And the so let's keep going through. I mean, we're talking about the news. U.S. Senate Democrats unveil a 3.5 trillion budget plan, okay, with a focus on clean energy and some of the infrastructure, manufacturing, transportation in the U.S. And so we can always check into some of the related stocks. So if you have any thought, please also leave your comments here. Okay, so S&P 500 is going up, right? Yeah, it's going up. It's a breakout. It's a record high yesterday, and all the like US major indices like Dow Jones Industrial Average and the Nasdaq Index all had recently just had a record higher and higher and higher, because whenever the government can, no matter the government is Biden or Trump, whenever the government can, they will try like buckle down, spare nothing, try their best to keep the stock market. That's how capitalist system has to work. That's the way it is. Okay, so Robinhood. Yeah, we're gonna talk about Robinhood. Thanks for the question, Boeing, and the fighting for you. So we're gonna have some, because everyone know like Robinhood is as being like one of the eye-popping and jaw-dropping news in Wall Street, like in the U.S. stock market, and also Robinhood stock. Let's see what's going on with that. Hey, yeah, I mean, after the surge on last Wednesday, we can see after the surge on last Wednesday, we can see Robinhood just just like pull back into a triangle contraction. What is triangle contraction? You can see if we looking the daily candlestick, you can see usually the triangle contraction would be a huge volatility candlestick first, and then become like smaller and smaller and smaller, become a triangle, something like this. And then what will happen the next? After when the triangle contraction coming into a like even like a smooth come down into an even smooth candlestick, a very like a narrow got contracted into a very narrow small candlestick. That's about a time to explode again, and usually there will be a chance to explode upward or downward. So a lot of times, like, you can do strategy to buy both calls and puts to just kind of like do this kind of like arbitrage strategy to take a profit from. Okay, but this is a little bit deep, but I mean, all in all, I mean, right now by the chart of Robinhood like this, probably this is two stage. They probably will just like burst upward or downward like this week, okay, in the next couple of days. And I just saw news like earlier today saying like the Reddit forum Wall Street Bets is like a lot of like mentions there are saying to short Robinhood. Okay, so but the things like last Wednesday, the story, the context was like this. If we look at the Robinhood like in hourly chart is more clear. Okay, so it had an IPO on July 29th, in the late July, and then the performance was poor, in the first like 2 days after the IPO, because of the a lot of like the event. I mean, because of the event, the news, the negative news, and also the negative fundamentals for Robinhood. So I was saying to short the first day, the second day, I mean the day after the IPO. Okay, but we can see that it just like just the second day, and it just like step back up steadily, very steadily in from the technical standpoint. And then on last Monday, it just like, stepping back up all the way to be ready to have a breakout upward. And last Monday, okay, so to this point, I just remember last week in the live stream last Friday, someone in the live stream was asking, do I think like Robinhood was a scam? Okay, so yeah, sorry, I kind of like misunderstand that question by, back to then. But I haven't heard of anyone saying like Robinhood is a scam. But this kind of movement and the market sentiment from the ARK, the U.S. stock market support, and all the retail investors Reddit to support Robinhood. It's like kind of like a manipulation. We just had a guess like in the past May, right, when all the meme stock just surged. We thought that might be a scam or like manipulation, because I mean the things like what made the surge of Robinhood on last Tuesday and last Wednesday, because like the US stock queen Cathy Wu just increased the holding, just raised the holding of Robinhood on and announced publicly last Monday, last Tuesday. And also like the CNBC Jim Cramer also like just like shout out to support like Robinhood last Monday. And then early hours last Wednesday, the mentions on Reddit for Robinhood just exploded. So was that a coincidence, or was that just kind of like potentially like planned or plotted? Is it possible? Is it possible to be a illusion, or we don't know? But is it possible that like Cathy Wu is like colluding with some of those like big Wall Street big wild wolf, those like institutional investor like hedge fund, private equity fund, and those like big wild wolf institutions also have their connection, have their way to kind of like make the to kind of like first the mentions in Wall Street Bet forums. So are those like a discussion and mention in Wall Street Bet actually made by retail investor, or actually some like some evil like institutional investors behind? We have no idea. You have to if you have any insights, please let me know. Okay, we can discuss further. So let's see if we have some more question here. Robinhood, that's how the Robinhood has been going. So yeah. So let me finish the technical for Robinhood real quick. Let's try to draw like a support and resistance at Robinhood. So the support and resistance, like by like easy drawing, could be something like this, and and as always, you can see the way I draw the support and resistance is like simply based on the previous high and low, and if there is any candlestick come with like a much stronger volume, we will put more emphasis on that candlestick, something like that. Okay, for example, this candlestick, this like surge has a lot of volume, so the high would make it call a lot, but there's not necessary all the time. So a lot of time you can also draw line on your own. But right now, it's kind of reasonable to draw in this way. We can see the pattern, the price movement is kind of like mildly step upward right now. So, but the Wall Street Bet on Reddit is saying to short it. And if you look into the option market at the very beginning, it was going to long, and and turn into, at the very beginning, the option market was like bullish for Robinhood, and then turning like bearish. And so like Robinhood is getting, I mean, into another era of uncertainty. So last Friday I was saying to I just enter here with the last I just enter here with some like buy order, and then that was a day trade. I was saying like for this type of meme stock, it's totally fine, just do some day trade for it without any mid to long term investment, just day trade or like swing trade. And then I just closed my position the same day, and then it just like just like dying down. I mean the move is like dying down into into the end of the triangle contraction. And I mean, I don't have like too much insight about like Robinhood, but I think it will be later on this week he will just like explode upward or downward. So later on, if I have time, I will do more research into that to see if it's worth like betting with some like to enjoy some like gambling pleasure here. Okay, so let's see. Morning guys. US strong. Strong. So what's going on for the US market? Let me see real quick. Okay, so the market just a little bit above the previous close. S&P 500 is up for about 0.12%, and Dow Jones Industrial Average is up for about 0.1%, and Nasdaq is up for about 0.12% right now. Okay, so yeah, how's China now? Like China now, I saw like some news like today. It's also, I mean, as always, like the articles, the topics I share on live stream, I usually put the links down below in the description box. So please check into that if you wanna, have more details from those articles. And also like please never forget to hit the like and subscribe button when you look down below this video. Okay, so today we gonna we got a news about China tech stocks rise as analysts turn positive after sell-off, because in the past like a few weeks we saw a lot of the sell-off, a strong pullback due to the China tech crackdown. But that's, I mean, every crackdown, I mean every pullback, every crash, every correction will be just white noise in the mid to long run. So I mean, for every huge correction or crash, that would be a good chance to buy the dip. And why? Let's see. Let's take a look into the stock everyone know, like Amazon. Okay, so last week we also say 2 weeks ago Amazon just had a poorer than expected earning report, and also downgrade the guidance for the second half of this year. So that's why the stock price of Amazon just dropped about like 7 to 8% from previous high. But I was saying that's totally a good timing to buy the dip, no matter for short-term trading or long-term investment. Okay, you can see the resistance and the support I draw here. I mean, for short-term trading, you can always use like a 3300, or sometimes I don't like to use the integral because there will be a fake breakout. So in this case, I would like to use like 3000 299.99. That's the support in the very short run. And if the price closed down below that level for 3 days in a row, I will just stop loss, okay, for short-term trading strategy. Okay, so but for like, and then what's the profit taking for this short-term strategy will be, the price range will be about like a 3,000 like 499, something like that. And that you know, the resistance, the profit taking level is around here, and the stop loss level is around here. For very short-term trading, for swing trade, probably can, you know, can be completed in a couple days or in a month in terms of this type of stock, because Amazon is a, you know, giant, is with a market cap of like 1.7 trillion. So the volatility cannot, it's impossible to be, you know, have a like a strong like volatility as those meme stock. Okay, but for mid to long term investment, if you are someone who like to allocate like you know 1 to 3% of your monthly salary into Amazon or Google, this type of value growth stock, this is also a good time to buy more at this price level. Okay, because why? Last time we mentioned Amazon and from the US and Alibaba from China. Okay, these like e-commerce giant, and why their stock just like surged from the COVID-19 low in last March, because the shopping, the shopping and the social behavior, the human shopping behavior was changing from, you know, physical shopping to be online shopping, you know, over the world. The change was, you know, huge since the start of the pandemic. But the change cannot like, you know, cannot just like you know, have like a like stronger and stronger growth like forever, right? So right now it's about the time of the post-pandemic, and you know, more and more people got a vaccination, and the pandemic is easing, it's releasing right now. So the shopping behavior online was still we're still like a slowdown. We're still coming to a you know, a flat level after a sharp increase. Okay, so that's why the earnings of Amazon, of Alibaba just came under expected for the second quarter. And but for this type of company, basically they're kind of monopoly in their own region, and they're basically, it's impossible for them to be there's, I mean, no one can compete with them in the near future, in the next like 1 to 3 years, right? So for the mid to long-term investment in the next 1 to 3 years, I think like Amazon and Alibaba are still good target to invest, especially if we look into Alibaba. The chart is Alibaba. If you look at the monthly candlestick, why Alibaba is like looks much like deflated, much more deflated, much more like, you know, just like pull back much harder than Amazon, because since the end of last year, we know like China, the one of the the record IPO of like Ant Group was going to take place in Hong Kong Exchange in the end of last year, but because a lot of the story behind, the China government just had a hold, just call for a stop for the IPO. And because, and that also just Ant Group is the, what was the major financial payment transaction system of Alibaba. So Alibaba stock price just a lot of the giant tech company stock price just pulled back in the end of last year, and in the first quarter, second quarter this year, continuous cyber security, like tech crackdown on Alibaba and all those like technology giants, making the price keep pulling back. But if you look at the technical chart, like very simple technical chart, you can see how it's the resistance and support are drawn, right? They are just simply based on the previous high, previous low. And right now, if we look into the daily candlestick chart right here, we can see it just pulled back all the way down below the support right now. And if we have the horizontal line here as another support, and this is drawn based on the previous high with some volume, and the previous low with some volume here, and also the number 189, and also it's kind of in the between of the recent gap here. That's how the horizontal line is drawn as a support, as a short-term support. The price right now for Alibaba is kind of consolidating in a between of these two lines of the previous support and the next support. Okay, it's consolidating between that. So I'm going to buy. For short-term trading, and long-term investment for both of the two different type of things. I just go long for Alibaba and I go long for Amazon. Okay, the idea, the concept is pretty similar because they has to be strong and no one can compete with them, and the no matter what kind of bad news, negative news will be just white noise, will just be temporary correction, and that's just about a good timing to buy the dip. But buy the dip, some people say, oh, buy the dip, but when you buy the dip, there might be a dip after a dip and another dip after that dip and a dip of a dip after a dip, a lot of dips, right? Yeah, true. So what we're gonna do, we're gonna have stop loss. That's about trading, okay? It's very easy concepts. No matter for a surge, going up or going down, buying dip or profit taking, we need to have stop loss and profit taking and calculate your risk and return ratio. Okay, so for me, I'm going to have a stop loss point at the $189 right here. That's how the horizontal line is drawn. Okay, and for very short-term trading, but I haven't thought about the profit taking because the by fundamental analysis, event analysis, and the technical analysis, I think the upside potential for Alibaba is really good. Let's see on TipRank. Let's check into TipRank to see if TipRank have Alibaba's some rating and comments for Alibaba. Yes, it has. Okay, so you can see this is Alibaba stock forecast price target. Okay, you can see this is based on the Wall Street analysts. Okay, so almost every analyst from Wall Street is rating to buy Alibaba with a 12-month forecast upside potential at about $336 and downside potential at $190, and the current price is about current price is right now is $196. It's even much lower than the average forecast at $275. So do your calculation. Okay, current price is $196, and after 190 it's only $6. And what's the room, what's the range between 196, what's the room between 200 and 340? It's 140. So the risk and return potential is like over 20 times. It's over 20 times for Alibaba right now. And it's not set by me. It's set by all the Wall Street analysts. And you know, the information I show, usually I like to use like tipprint.com because it's user friendly, everyone can use, okay? But you can also pay to become a premium member of tipprint.com, okay? Or you can use like you know, Seeking Alpha and all those investment research. Like I think like probably most of them, those investment research company will tell you the same thing, okay? The like Weibo, the data here is almost the same. Like almost 90% of the analysts is saying to buy, and almost no one is saying to sell, okay? Okay, only 1 or 2 out of the 100 saying to sell for Alibaba. So that's why we just mentioned the Alibaba and Amazon. So sorry, we just spend too much time, but I mean, because we have some like comments and advice from the audience in the past few live stream, like maybe I can try to be I mean, talk more about like certain stocks, make it more clear, make it more complete, instead of like including like too many stocks and like you know, in too many different industry. So like now I'm trying to have more have more focus into like maybe 3 to 5, no more than 10 stocks, no more than 10 tickers in every live stream, to make the information more friendly for the audience. And you know, because I mean, after all, I hope the information I'm trying to produce will be really helpful for you to do some like, you know, investment research, right? Okay, instead of just like having fun here myself. Yeah, okay. So 11 Jeans, thanks for your watching on my Coinbase video, and yeah, thanks for your appreciation. And so AMC, someone is asking about AMC, and also someone is asking about the inflation, how bad the inflation can be. So we don't know. I mean, no one understands how bad the inflation can be. Like you know, a couple of decades ago, we have like Great Depression. During like Great Depression, we have like stagnant inflation. And last time we were saying to talk about stagnant inflation, but later on, if you had time, please Google stagnant inflation. It's an inflation much worse. It's a much worse inflation. Okay, means the price like keep going up, but the economy is not actually growing up. So that's a disaster. Okay, you know, can you imagine your asset is like a depreciate into maybe like, you know, 1 out of like 100 or 1 out of 10 compared to the original price, and then you cannot even survive to buy food or, you know, everything. Okay, that's what would happen in stagnant inflation, and a lot of trouble will happen there. Coinbase stock. Okay, yeah, so we're gonna talk about like Coinbase stock. Coinbase stock is a major, is a thing. The thing. I mean, if you still remember, in the past 2 weeks, like keep saying, I mean, in the short video of like the ARK, the US stock queen Cathy Wu, major holding, and the some of the cryptocurrency stocks, and In the short videos, in live stream, I mentioned about this like over and over and over again. And I'm not sure if you are the one really listen to me and really have the same thought with me to buy in Coinbase. Okay, you can see the price just like surge. The price just surged in the past couple of days for over like 20 to 30%. Okay, because of what? Because of the surge of Bitcoin price. Okay, it's not like, but that's the thing. Like when after the IPO of Coinbase, the prices pull back, but in the past April, but by then the price of Bitcoin was like going crazy, going up crazy. Okay, so Coinbase stock price is not necessarily 100% correlated to cryptocurrency, Bitcoin, Ethereum, or Dogecoin. Okay, it will still depend. And you might be asking like how right? At least in the short term, the previous resistance and support we just shown here already proved that the downside risk is really limited. And also, we also show the data. We also show the information on tprint.com and some of the investment research sites for Coinbase as well. Is saying the risk and return potential for Coinbase for short-term trading, for mid to long-term investment could be so juicy, could be so yummy, could be so sweet. Okay. So right now, for short-term trading, I'm not sure if it's a time to do profit taking. Okay, the profit taking for this type of pattern can be really depends on how greedy you are. Okay, how greedy you are, because the 12 months forecast for Coinbase by a lot of Wall Street analysts is we're saying to be like at 357. Okay, compared to the current price like 266, it's still like another $100 to go. Okay, in the next 12 months. Okay, so what you gonna do? To this point at Coinbase, we also gonna take a look into like Bitcoin. Okay, Bitcoin last week, please check into the live stream we talked about last week. We were saying like the price level of like a Bitcoin was the 40,000 price level of Bitcoin was a good level to do some profit taking. If you hold a lot of Bitcoin, that might be a good time to sell part of it. But if you are not holding Bitcoin, don't go short blindly with leverage. Okay, that's really risky, because by the technical analysis, it's possible that the Bitcoin market is just simply trying to kind of wash out to kick out some like investors who is not firm for Bitcoin anymore, and trying to replace with another group of investors who become bullish for Bitcoin. So the price, so that's what's happening in the past couple of days. The price like keeps surging all the way to the level of $45,000 right now. But we can see when we trace back, like we can see, let's if we have another horizontal, we can see the resistance here around like 48,000 to 50,000 is really strong. So for me, if the price like keep like going up to like 48 to 50,000, I will just like sell all of my Bitcoin holding. Okay, because I don't believe that the Bitcoin price will keep going over $50,000 in the second half of this year or next year. I don't believe that. Okay, I press this over and over again, and later on we can check back. Okay, so I think like 40,000 is good time to take some profit, and 50,000 is also a good time to take some profit. And back to Coinbase again. If we need to do the same thing to take profit for a Coinbase, that's not. I mean, like in the short video I made for like a day trading, for the key practices for day trading. We know that like when we trade certain stocks, certain asset, sometimes we can also have the support. I mean, some like a related, like correlated assets to make the analysis. Like when we trade Coinbase, we also look into the price move of Bitcoin and the other cryptocurrency, but it's not like 100% correlation. Okay, it really depends on the assets you're trading. So that's gonna be a lot of details to talk. So but the time is limited again, and I will try to make another like short video and talking to the correlation between the correlation and the strengths, the level of correlation between two different assets, between two different correlated assets or stocks. How we can utilize on that, how we can make analysis into that in the future video live stream. Okay, so but like let's see if we have some more questions here before we close the live stream today. Sell the stock. Lavon Jing say sell the stock now and wait until inflation passes. I would say not like you don't have to sell all of your stock. If you are holding like 1 million or 10 million stock, maybe you can sell like 10 to 30% of your stock to cash out, to wait for the potential crash to buy the dip. But you don't need to sell like 100% of your stock holding, right? Unless you are only holding like 10,000 or less than 100,000, something like that. Okay. Yes, yeah, Wasteland. How's my investing? Yeah, as mentioned, like I'm showing and I'm like talking about the tickers I'm having my trading and investment on, and like nowadays, I really don't wanna, I really don't wanna like just like stress hard in those like meme stock or those like super like market mover. Instead, I will like to have more allocation, more to have a rebalancing to allocate more position into those value stocks or those hedging related stocks, like cryptocurrency stocks, like what we just mentioned, Coinbase. And today, and also the value growth stock like Amazon and Google and Alibaba, we just talked about today. And in recent live stream, we also talk about the DraftKings and Teladoc Health. Like DraftKings also like the price spiking in recent days, but we don't have time to look into the detail. And the and NVDA, I was gonna say like I was saying to short for the short-term trading by the short-term technical analysis, the support and resistance withdrawal, and the and for this ticker we will talk more in the next. And okay, so but last time we were talking about like Intel and AMD, right? Intel and AMD, and we were trying to figure out the relationship between Intel and AMD, because like Intel stocks is like pulling back and AMD stock prices surge. And because what? Because the change, because the the competition of market share. Okay, AMD has been taking the market share, has been like eating the market share from Intel. That's why there's you know, the stock price just had a change in the past couple of days. But I would say, for me, at least from my 2 cents, that's a no. I mean, I'm not gonna touch these two stocks because Mm, because I think like for these two stack, like we will talk more. The technical analysis may not be decisive because these two stacks are huge tech giants with a lot of story, with a lot of technology, a lot of know-how behind in their business model. So the change of their market share is really based on the very like the hard knowledge, the hard information. Okay, how the demand, the supply and demand change, how the market environment change, how their technology innovation change, and all that. So the technical analysis may not be able to make the call for us to do short-term trading for these two stocks. So for me, this is a no touch for AMD and Intel in the short run. Okay. So AMC, yeah. Before we close, what's going on for AMC? AMC. Who is asking? Yeah, AMC shareholder. Yeah, thanks for your time. You are really, my beloved audience. Okay, beloved audience, and I mean, we will give away. We will give out like a free cat, like the cash gift, and I think like AMC shareholder will be the top one. We're gonna remember for the cash gift to give away. Okay, because I always see you here and I really appreciate your support. So before we close, let's see what's going on for AMC. AMC seeing like meme stock. Like we were saying, like okay. In the description box down below, I also put in the there are two major news today. AMC Entertainment will have technology to receive Bitcoin as payment by year end, according to their CEO. Okay, look into the news. And also like AMC revenue beats estimate, although their financials still looks poor. So so AMC, I was saying I was like shorting AMC, but right now the price we can see it just today just like jump because of the two good news. The price just like jump back above the previous support, and as mentioned over and over again, if the price close above the support for 3 days in a row, I will do the stop loss for my short order. Okay, but just my personal 2 cents. I'm still I don't see anything good from AMC so far. But because of the support and the appreciation of the audience, the thanks for AMC shareholder, I will do more research in detail into AMC, and we will talk a little bit more about AMC in the next live stream or short video. Okay, so yeah, sorry. Thanks for all of your time and watching, and the time is we already go over time, and sorry to be late. And so there's not a very like organized story or context for today, but the thing is just like let's have a quick review. The US stock market just had a record high, and the U.S. government, the U.S. Senate, Democrats just unveiled another 3.5 trillion budget plan to support the stock market, while the employment rate keeps going down, the job market keeps recovering, while inflation keeps going up, and the U.S. economy remaining in a strange and odd environment. So we have to be cautious. We have to be conservative. We have to be protective for our trading and investment. Okay. So thanks for your time and watching. And I will try to write down the thing I don't have time to answer today, and we will look into more in the next live stream or short video. Please subscribe and like and leave comment after this live stream. Okay. Thanks for your time. Peace.